Good morning, everyone. JR with Secure Metals. Welcome to today's video analysis for both gold and silver. Today is Wednesday, December 10th, 9:58 a.m. Eastern Standard Time. Today I'll do the monthly, weekly, and daily charts here for both gold and silver. I will also do the Dow Jones. And so we'll get right to it. So instead of doing monthly, weekly, and daily, instead of top down, I'll do top up. So I'll start off with the daily chart first. And so very interesting price action. We obviously hit a low here. A few big days we've had since we saw the low here around 11:31. I did state that a close above 12:15 was going to be very, very productive. And as of now, we are above this trend line here. Okay, now the reason why I started with the daily chart is just to show something here. Like I said before, what I like to see is a move. If we're going to change direction, obviously we are in a downtrend, okay? So if we want to change direction of this trend, what we want to do is we want to see a move up above the 20-day moving average. We want to see come back down, and we want to see this test this 20-day moving average. And obviously, once you've established resistance, you want to see a new high, right? So you establish resistance up here at around 1207. This level actually was one of my sell zones here. Okay, that's where it was. And from that sell zone, the market went down all the way to 1141. Probably took out a lot of stops down here, but immediately took back off. And created a new level of resistance, right? So we created a higher high. Since then, we've come back down. And just like I've said, we found some support at the 20-day moving average. That's exactly what I want to see. And the reason why, and created another high, right? So we came down to the 20-day moving average, and now we have established another high, even though this is a sell zone for me, right? This is a level of resistance. So this might be another level before coming back down, retesting this 20-day moving average here. And I guess within the next couple of days, maybe a week or so, we'll figure out how valid this 20-day moving average is going to be as far as support. So what we want to see is a continuation of this trend, higher highs, right? So you have a high here, higher high here, higher high. What you want to see is you don't want to see a move below 1180 at this point, because a move below 1180, obviously now you're no longer creating highs, which technically this is the high here, and this is why I'd like to see the low over here at around 1160 where this 20-day moving average was. But again, this day we had that Swiss referendum for the gold standard, and when it didn't pass, there was a sell-off, but an immediate recovery here for the gold market. But really, I would have liked to see it create a low around this level here, around 1164, and then continue to establish higher highs and higher lows. But again, at this point, we really just want to see how this level here, how this level of sellers is going to play out, and seeing if this is going to take this 1181 level out again. Okay, so currently we're doing exactly what we want to see. The market is doing exactly what we'd like to see, is creating higher highs, and it's also creating high lows, right? So we definitely don't want to fall below 1181 at this point, being that we are creating higher highs, right? So that's why I show the daily chart, just to show how I'd like to see this go above this 20-day moving average. Now you'll see here on the weekly chart, we still have some ways to go, right? This is the first time, actually the second or the third time that we tested this 20-day moving average. And as of now, we've finally broken through this trend line. But again, this is a sell zone here. So between 1230 all the way to 1257, this is going to be sell. You're also going to have confluence with this 20-day moving average. So again, a good shorting idea would be to once it gets to around 1240, 1245, or maybe even this high, this 20-day moving average of highs around 1252, then the market will come back down. Test this line that used to be resistance, now turn support, and go higher. That's what we'd like to see. Is that what's going to happen? I guess only time will tell. But if it falls below this line again here, again we are back in the danger zone, and the 1180 zone here. is going to be a vulnerable area now. Okay. So again, no matter what happens here, what we don't want to do is we don't want to fall below 1181. Okay. So that's the weekly chart here. So the weekly chart really in a level of resistance here. Okay. And the monthly chart here. Okay. Currently testing the 20-day moving average. Stochastics are overbought, oversold, and now they're looking to turn around and go higher. This 20-day moving average has been tested quite a few times. The more times you test it, the more likely it is for us to take it out. And we are building a nice bullish engulfing candle here. That's a very nice candle. If we can end the month above this level here around the 1220, I think we have an option we have a good opportunity to test this level here around the 1380 zone to 1430 zone. Okay, so that's on the monthly chart. The monthly chart building a really nice engulfing candle, but again, the candle does need to close above the 1215 zone. Okay, that's your monthly chart. And now we'll look at silver. I also want to point out this here. I think I mentioned this on my previous video. Okay, we did see this. We did see this outside candle. Okay, where it was higher and lower than the previous candle. That's a bullish formation. Again, we did see that on the daily chart, I believe it was. Actually, no, we saw this here, and it turned out to be a false indicator. The market went up slightly before coming down really hard. So again, this is the exact same level where the sellers were that took out this this outside day candle, this positive outside day candle, and this could be that same level. So again, at this point, we just want to see if there's still enough sellers here to bring us back up under the 1181. But this is a very strong level simply because it took out a very significant level around 1181. This is the level that took this level out. So again, there might continue to be a lot of sellers up there. Okay, let's go to silver. Silver testing another zone here. Let's start off with the daily chart. I think we have something similar again. Yes, so again, with silver, you saw a move up above the 20-day moving average here. Okay, comes down. The Swiss referendum again pushes it down a lot further than we wanted to. It actually did create a lower low, okay, at around 1432 or 14. The low was actually 1432. Then it goes above and creates another high. So we've established a high here around 1672. Now we've created another high, but now we are again testing a level of resistance. Okay, and you're going to have a lot of confluence here. You're going to have the 1723 area here, all the way up to the $18 range. Okay, short idea would be to short around the mid 17 area, and probably put a stop loss and be safe around 1860, 1865. Technically, this level technically this level should be a good one. Again, you have 20-day moving average coming down here. That's going to act as a resistance. You have this zone here also is going to act as resistance. And this is the zone that actually took out the significant level around 1650. So this is a good zone. But again, a really bullish engulfing candle here. So you have to be very cautious about this, right? But again, I do expect a little bit of a move back to the downside here. And just like gold, right, we want to see a move above the 20-day moving average, which we did. Let me erase some of these lines here so we can see a bit more clear. Okay, so again, moves up above the 20-day moving average, comes back below the 20-day moving average, and now we've established some resistance up here, right, the 1680 zone, and currently above the 1680 zone. So again, as far as silver goes, this is the high, 1680. We've created another high, and now we want to see if we're going to create another low. If it falls below the $16 range again, this is your 20-day moving average of highs and lows, the lows being at 1601. So again, we want this 20-day moving average to be tested again. And from there, what we want to see is we want to see another move to the upside. And that's the only way we're going to establish a long-term trend. On the weekly again, very obvious zone here of sell. Your 20-day moving average is going to act as resistance. And I don't necessarily expect a new low, but I do expect to move back down to maybe the $16 range here. Okay, and on the monthly chart, Monthly chart also, just like gold, building a really nice engulfing candle, but this is a monthly chart, so we have to see how this month ends. But again, overall, the charts are looking very robust, very nice. And at this point, we just want to see if certain key levels are going to hold. If they do, we can see gold rally up to to the high 13s, low 1400s, and silver. We can easily see silver rallying up to this level here, this would be the level between 25 all the way up to the 22 area. So again, on the monthly chart here, we do need to surpass this level here around the $18 range. And the $18 range, obviously, we all know that 18.20 was a significant level to break. We broke that level. And again, just like I said on gold on my previous video, you do have false breakdowns. And it looks like gold actually did a false breakdown, right? Because it came below this level, significant level around 1180, came down and immediately recouped, right? So that's a false breakdown, and that's why I predicted the Dow Jones was going to decline, and that's why I'm predicting that this market, if this, it looks like it is a false breakout, and at this point I am expecting higher prices. So long as this is the final level holds. If this final level holds, then we're going to 1380, no doubt in my mind. Okay, this to me looks like a false breakdown, but again, this is the last level to break. But it looks like a false breakdown. Silver wasn't necessarily a false breakdown because it fell below the $18 range and it stood there, and it actually came down even lower, created high and lower highs and lower lows. So at this point, silver does have to. Gold's chart looks a little bit more robust, and because of that gold chart, and because gold and silver trade in a positive correlation, though silver's up a bit more volatile. Because of that false breakout on gold, I expect gold, silver prices to continue to go higher as well. So being careful, again, to short at these low levels is extremely very dangerous, right? And the last thing I'll do is the Dow Jones. The Dow Jones continues to plummet. The Dow Jones right now is at 17,677, very oversold. And like I've said before here, this chart just does not look robust. This is a broadening formation, which is a very bearish formation. And within the next, I would probably say, I was doing some analysis the other day, and I would probably think that by sometime in the late 16, maybe even 2017, it looks like we'll probably see this market come back down. I mean, this is just a monthly chart that just doesn't look very positive at all. Bubble here, 2000 dot-com bubble. Bubble here, another, this is a 2008 bubble. We've just reached the 18 trillion mark. 2 weeks ago, we officially hit the $18 trillion mark. Okay? This is extremely dangerous. No one knows how this is going to end. The U.S. is the biggest debtor nation in the world. We've accumulated more debt than any other country than any time in history. So again, basically not having any gold and silver in your portfolio is really just trusting these politicians and trusting that these guys know what they're talking about and know what they're doing, right? But on the monthly chart here, the monthly chart extremely overbought here, okay? The volume is going down, which basically means that that the market is very thin. The market is very volatile. Right now, this is an illiquid market, and any big institution that begins to come out of this market and doesn't want to continue to push for higher highs is going to bring this Dow Jones down very, very, very fast. This is the trend here. And once we fall below this level here, the 16, I would say, again, we would have to see something similar. We want to see, this is a monthly chart, so it could be a while before we see this, but we want to see a move below the 20-day moving average, go back up to the 20-day moving average, and come right back down, right? That's the monthly, right? This is the daily. The daily, you have I'm sorry, this is the weekly. So again, this week, if we finish off the week below 17.7, that'll be a bearish engulfing candle, right here. And if we see another bearish engulfing candle, we can easily see this market test this level here, back down to the flip zone here. This is prior resistance, now turn support. So we can easily see a move back down here to the 17.3. That's what I think this market is going, at least in the short term. I think back down to 17.3. If it breaks below this level here, Again, I would think we're going to try to continue to create new lows. But again, we have to see how this market is going to play out. But the market is just way oversold, way overbought, I meant. And currently, the daily chart also testing below the 20-day moving average. This is where I predicted that the market was going to go down to 16.4, 16.3 right here. The market came up here, tested the zone, and then dropped, right? You had the false breakout right here. That's your false breakout. And false breakouts or false breakdowns usually lead to big moves in the opposite direction. Here's another broadening formation here. I'll take all these lines out. Here's another bearish formation, the same formation that we saw in the monthly chart. We're seeing it here on the daily chart, right? So again, currently testing the top of this formation. If it falls below this level here of 17.5, I would probably think that this is going to create another low here and come back down to 15.7, okay? And maybe when it gets down there, then you'll see the Federal Reserve start panicking again and maybe print some more money. So again, very, very interesting market we're seeing here. The market just hit an all-time high again. And I guess the question that I always ask is, so they always teach us to buy at lows and sell at highs. I guess the question is, right, you have a high here. This high turned out to be a bubble. This high turned out to be another bubble. And this is another high. So if you want to keep pushing it up to 19,000, 20,000, you can. Or you can look at a market that's down, right, and start accumulating in this market, right? But again, that's just my opinion. You do what you think is best for your portfolio. I hope you enjoyed the video, and we'll see you next time. Bye-bye.